Welcome to the Expert Series from Selling Your Canadian Business. Our book lays out the expert team of advisors every Canadian business owner needs in their corner. This series brings those experts into the conversation, one at a time. Disclaimer: this series is for educational purposes only and is not professional advice. Always consult qualified professionals. Find our book and more resources at sellingyourcanadianbusiness.ca. Here is your host.
Hello, everyone. I'm David Prowse from the Shaughnessy Group, and welcome to another episode of the Expert Interview Series. This is our opportunity to interview the experts who help business owners grow and eventually exit their business. And today's guest is Benjamin Sinclair, who is an investment advisor and associate portfolio manager at Design Securities. Previously, he was a research analyst, having spent 9 years covering equities in the financial services sector for a mid-sized wealth manager. Ben also runs a newsletter and podcast at www.beyondtheexchange.ca, both focused on helping investors design or deepen and understand the private markets. Ben is a Chartered Financial Analyst and a Chartered Alternative Investment Analyst. Ben, thanks so much for joining us.
Thank you so much for having me, David.
So Ben, tell us a little bit about your background and how you got to doing what you're doing today.
Well, you just touched on it in my bio. My background is as an investment research analyst, and that's really all I wanted to do after graduating university. So that's what I did, and it was a wonderful ride. But over time, I developed a strong interest in private markets, which we'll certainly touch on later in this interview. And I saw an opportunity to build an investment advisory practice around that. There are other examples of ways that financial advice has evolved. And frankly, I didn't feel that the industry in Canada had evolved with it. And I saw an opportunity really to build a practice from scratch with a blank sheet of paper at a firm like Design, which really helps people like me operate an independent practice and build something that's modern, that's for the year 2026, and is relevant for people like business owners.
Yeah, excellent. So we know a lot of business owners have a lot of net worth tied up in their business. So, you go to sell your business, all of a sudden now you got a big windfall. What are some of the things maybe business owners should be thinking about with respect to that?
I'll start with the boring one first. Business owners who sell have to be aware of the tax implications of what they've done. And really what that means is don't go assuming that the check you've received is the money that you will end up with, because that's one area where you can run into trouble. I would say at a larger picture, though, if you take a step back, business owners traditionally have put all of their net worth, all of their identity, all of their time into one business, into one asset.
Right.
Now, after they've sold, there's really an opportunity to achieve diversification, not just with their time, but of course with their money as well. So now all of a sudden, you can diversify by asset class, you can diversify by geography, you can hold money at different investment accounts. And this isn't just about the numbers on a page. This is about a mindset shift. This is about shifting from a time period where you built up extraordinary wealth by making a singular bet that's worked to preserving wealth.
Right.
By spreading it around in different places. And I think that's the main thing that people just have to adjust to. And it doesn't happen overnight, but it's very important.
Yeah. It's a mindset shift.
100%.
And do you see lots of owners making, mistakes out of the gate, like maybe the first 6 to 12 months they've got a big balance sitting in their bank account now, and they're trying to think about what to do, and maybe they don't really plan it out well, and they start making mistakes?
Those types of mistakes are inevitable, frankly. because if you're not used to that state of being, then it can be an incredible adjustment, especially if, as you alluded to, especially if you don't plan for it properly. So a common mistake might be uh, putting too much money to work right away in a commitment that's done without properly thinking about that, whether it's a massive yacht or a new investment opportunity.
Right.
It's a big adjustment for people to make, especially when they have a windfall. Keep in mind, there are going to be lots of people all of a sudden who know about that and are going to come to you with their hands out.
Yeah.
And those are the types of things that business owners just haven't had to deal with in the past. And I think step one, it occurs well before you actually sell the business. Step one is being aware of those things, because if you're not, then it's really, really a big adjustment period that, frankly, not everyone handles equally well.
Yeah, for sure. A lot of the owners, that are watching this are probably going to be maybe within 5 years of a business exit or less. What types of things maybe should they be, starting to work on today to start preparing for that eventual transaction and what they're going to do afterward?
Yeah, I mean, this is really the same type of thing, and you know as well as anyone, David, that the good news is these transactions don't happen overnight. It takes years of planning. It takes lots of advice from people such as yourself. But that's a benefit as well. It allows people to essentially make that adjustment in advance.
Yeah.
And just building on what I was talking about before, it's not just preparing in terms of finances. It's building that, it's planning for that lifestyle shift.
Right.
So if you think about the transition that a business owner goes through, they lose their identity
Mhm.
when they sell their business. They
Right.
lose their day-to-day routines.
Right.
What do they gain? They gain the financial freedom to do whatever they want,
Right.
which is the best thing that money can buy.
Yes.
But that's a huge trade-off, and not everyone handles that equally.
Yeah.
So a big part of the planning process is deciding, A, what type of lifestyle do I want and who do I want to be post-sale?
Mhm.
And of course, this is where financial professionals would come in. What does that look like financially? Can I afford it? Right? Is it worth it?
Right. Yeah.
Those are the types of things that are critical to plan ahead for in advance of a sale, because you would know this as well as anyone. People do tie their identities to their business. So
100%.
to be ready for a period after that, it's not easy. It requires planning, and it is critical.
Yeah. Excellent. So we've talked a lot about, family office style investing. Wealthy families and institutions will invest, differently than the average retail investor. What are your thoughts on that in terms of, maybe somebody who's, business owner who's just sold or just about to sell, maybe how they should change their approach towards investing.
Well, let's take a step back and talk about what we mean by family office investing. And for anyone who doesn't know what a family office is, the ultra wealthy would set up a little mini investment firm for the sole purpose of managing their own money. And that's what we mean by family office. And if you look at how family offices typically invest, the good news is we don't need to guess. The research is in. There are surveys done by Morgan Stanley, by RBC, by Citi, by UBS, all sorts of organizations like that. The study that I see cited most frequently is from Goldman Sachs,
Yeah.
but they all show something fairly similar, what you'll find is a fairly equal split between public assets and private assets. So
Right.
public assets, we mean stocks and bonds, and private assets could mean private equity, could mean private credit, real estate, infrastructure, other asset classes. So it's really much more of a fuller portfolio that family offices employ compared to individuals. And the important thing to consider with that is family offices typically have similar financial goals as the rest of us. You're talking about growth, you're talking about wealth preservation, and you're talking about legacy, whether that's passing money on to the next generation or philanthropic efforts. So there's a lot to be learned from how family offices invest. And if you look at how they do invest, it shows that there's a lot more to investing than what the typical individual currently does.
Yeah. And it seems like these types of investments are now more accessible to the average person than maybe they were 10 years ago.
100%. So if you look at private markets specifically, which is, like I said, close to half of the investments that family offices make. Historically, it was institutions and it was the ultra wealthy that
Right.
invested in these strategies. The strategies were quite bespoke. There were 1,000-page contracts that had to be signed. There were structures which were quite convoluted.
Mm-hmm.
And as a result, the industry really grew up with these investors.
Yeah.
They were hunting elephants. In a sense, these private equity firms were just going after the large investors because that's what makes the most sense.
Yeah.
Now, gradually, those investment managers, so think of names like Brookfield or Blackstone or KKR
Right.
or Apollo.
Yeah.
There have been technological shifts, there have been regulatory shifts. Those firms have now come out with product which is structured more appropriately for individuals. They've also entered the Canadian market.
Yeah.
And that's a big, big, big change from not just 10 years ago, but even 5 years ago.
Right.
And this is what I was alluding to as the impetus for me starting my financial advisory practice. Because again, I don't believe the financial advice industry in Canada has truly adjusted to these new investment strategies being available.
Yeah.
And more broadly, it hasn't adjusted to this idea that regular individuals, or even millionaires for that matter, can now invest much more like family offices.
Yeah. So let's just talk a little bit about some of the main categories that these private and alternative investments will take the form of.
If you look at the strategies that are broadly available to individuals, you can categorize them in 4 ways. So there's private equity, there's
Yeah.
private credit, there's private real estate, and private infrastructure.
Yeah.
With any of these categories, the appeal and the objective are quite similar.
Yeah.
One is you are looking for better returns for the risk that you're taking,
Yeah.
with the trade-off being reduced liquidity. So you're
Right.
making a longer-term commitment.
Yeah.
The other benefit you're looking for is better diversification, which we talked about earlier as well.
Yeah.
So on the private equity side, there it's pretty simple. You're still owning a share of business interests,
Yeah.
and you're looking to outperform the stock market.
Yes.
On the credit side, you are still providing financing to businesses or other assets. You are looking for more income than you would get from public bonds.
Yeah.
Real estate and infrastructure, I'd say, sit in between those two, where you're looking for a balance of income and growth,
Right.
and you're also looking for diversification
Right.
from traditional stocks and bonds.
Yeah. And I think, we've dealt with a lot with more private equity firms coming out of the scene. And what we've noticed is that they tend to be kind of moving downward in terms of the size of companies that they're investing in. So, what I used to see 10 years ago was they would only invest in, say, businesses that with $5 million in cash flow, EBITDA or up. And now we're seeing a lot more of them moving down even, 1.5 million, $1 million. And I've seen private equity funds that are available to, I think you still have to be an accredited investor, but they're still available to a lot of business owners who, looking for places to go invest their money. So I think it's interesting how much more options are available to the average person today, especially if you're a sophisticated investor.
I think what you have to look at, just again, at a very high level, in my opinion, private equity is a better form of ownership than a public company. And private equity, of course, in a lot of contexts, it's a bit of a dirty term. There are certain people who do not hold the industry in high regard at all. But at the same time, if you look at the pressures that public companies are under, the short-termism, the quarterly reporting, the regulatory headache, the paperwork, there's a reason why I think it's a pretty safe assumption as you get businesses ready for exit at the Shaughnessy Group. I think it's a pretty safe assumption that going public is rarely, if ever, going to be one of those exit routes.
Yeah, no, that's not for the average company.
Right. And I could also be pretty certain that most of your business owner clients are quite happy that they do not have to jump through all the hoops that public companies have to jump through.
Yeah.
So it's a little bit of an irony that business owners understand the appeal of being private, yet at the same time, when it comes to an RRSP, thus far we've only really been investing in public companies.
Yeah.
Right? So I think private equity certainly has its place for investor portfolios, as do other private investment, private asset classes. I also think that when done right, private equity is just really good for an economy. When businesses are run properly by professionals, that's good for an economy. When business owners have more avenues for exit, that is also good for an economy, because you mentioned that some of your clients may not have had access to private equity before. Maybe you had much more limitations on where they could find a buyer. So certainly there are benefits along that front as well.
Yeah.
The key is, of course, it's an industry which is not as well understood as public equities. There's not as much data available. There's not as much frequent trading. So it does require a certain level of expertise and experience to navigate it, but it has its place.
Yeah. Well, I think one of the big advantages of private equity also is that, you think about a public company, and because of, they have to do quarterly reporting, that's, their decision making has to be done, largely on results that are going to be forthcoming for the next quarter. Whereas for private equity, I mean, for many of them, they're going to run the company, maybe with a different type of atmosphere than a public company would. So I think you're going to see a lot of them take a longer term view, make investments that make sense. So some of them do have like maybe a 5-year time horizon, but we're seeing more and more of them actually take longer terms, like 7 to 10 years. So if you think about that, like a 10-year time horizon, it's pretty much probably for the average business owner, that's probably realistically maybe how long that they might own that business. Some of them will obviously go for multiple decades, but if you have a 10-year time horizon, that's a long-term time horizon. So some of the decisions you're going to make are going to be certainly, you can sort of take a hit for one quarter, but you're going to benefit maybe the next year. So you can make business decisions that are a lot different from a public company. And I think for potential investors, that's it probably would appeal to an entrepreneur who's already made a lot of long-term business decisions in the past.
If you look at time horizon along those lines, you don't need to guess at that. There's research on this too. Surveys have been done of public company CFOs that show a large majority will make at least a small sacrifice in long-term value to make quarterly numbers. or at least to get smoother quarterly numbers. So there are people who will say private equity companies are short term and they're always looking for a buyer, that sort of thing. And I would counter with arguments very similar to what you just said. You're still talking about multi-year time horizons. And what I'll add to that is with some of these new funds that are meant for individual investors, these are quite long-term funds as well. They actually run to perpetuity, which means private equity companies can take an even longer time horizon.
Yes.
And yes, 10 years might be as long as someone would own a business. I would also say it's about the maximum or even longer than the maximum of a business owner's strategic plan time horizon.
Sure.
Right? I mean, if someone says they're making a decision in a business that's got a longer than 10-year time horizon, I would question whether they can truly see that far into the future anyways.
For sure.
So I definitely see time horizon and patience as one of the main reasons why private equity is just a better form of ownership than being public.
Yeah. So we talked about some of the reasons why private investments can be attractive. What are some of the other trade-offs that maybe a business owner should consider before they jump in?
I think so number one, number two, number three is liquidity. This is an investment which cannot be sold next week. Right. So if you need your money next week, this is not a strategy for you at all. There's nothing wrong with being short term. Certain people have needs for their money in the short term. But if that is the case for you, then the public markets are the place to be. So that's number one. Number two is that it does require some degree of risk tolerance. Because these are illiquid assets, they get treated as riskier by the regulators. And that puts guardrails on people like me so that I cannot buy these products for people who have low risk tolerance. And I'm not going to argue against that. That's the way it should be. So I would say those are the two main things. And then I would say the third thing is because there's a little bit more complexity and a little bit less transparency, you just need to be comfortable that A, you're working with someone that you trust. Yes. B, that you have a level of knowledge that makes you comfortable as well. Yes. Because these asset classes do have a lot to offer. We talked about the benefits of family office investing, but it's not as simple as just clicking a different button to go into a private equity investment as it is buying Apple stock.
Yeah.
Right.
Yeah. So tell us a little bit about your intake process. So, a client comes in, maybe they've just sold their business. And you mentioned a bunch of factors, like, for example, like risk tolerance, for example. So what are the types of things that you're going to look for to make sure that if you're putting together a portfolio for them, it meets their needs?
Yeah. So I just mentioned that time horizon is the big one. Risk tolerance is the other big one. And I would say that for financial advice in general, I'm not just talking about myself. I'm not just talking about other people who are in private. I'm talking about any financial advisor at any firm.
Yeah.
It's about getting to know the client properly, what their objectives are, what their risk tolerance are, but also what their goals and their dreams are for their money. And packaging all of that into a plan that makes sense for them. Yeah. And also, it's a matter of working with other professionals within that business owner's life to make sure that the business owner does not feel like they're on their own, and to make sure that the business owner has more clarity about how their desired lifestyle looks financially, and to give them that peace of mind so that they can truly enjoy that next stage of their life rather than just worrying about the dollars and cents every day.
Yeah. One last question. So, we talk a lot in exit planning about there's an exit advisory team. And I always tell people, you need a good accountant, you need a good lawyer, you need a good wealth manager, financial planner. and there's other people, that are in that exit advisory group. How do you kind of see yourself working with those type of professionals? And, do you sometimes, take the lead as quarterback, or other times it's someone else, and you have to kind of take a backseat role? How do you work together with those professionals?
Well, the most important thing, no matter what my role is to have a certain level of humility where I know what I'm there for,
Yeah.
and I'm not going to try to do anyone else's job.
Yeah.
So in some cases, what that means is I'm just the guy choosing between Apollo and KKR,
Yes.
right? And someone else might be the quarterback.
Yeah.
In other cases, I might still be choosing investment products. I might still be building a financial portfolio, but the client may also need a lot more help on estate planning, on tax, on legal issues,
Yes.
that sort of thing. And then it would be up to me to find like-minded professionals to work with,
Yeah.
or work with those professionals as well,
Yeah.
and make sure that the client is receiving unbiased advice
Hmm.
from dedicated experts in every aspect of their financial life. That is the role, really, not just of me, but of all those different professions that you just mentioned, David. Um, it's where people try to cross over into someone else's lane, or people have big egos, or people don't know what their roles are. That's where you can run into a little more trouble. And it is a big priority of mine to avoid stuff like that.
Excellent. Well, Benjamin Sinclair, thank you so much for joining us today. This has been a great conversation. Everybody out there, don't forget to check out his podcast and newsletter at beyondtheexchange.ca. You can find out information on our website on how to contact Ben. Ben, thanks very much. And everybody out there, thank you for joining us today. We'll see you on the next episode of the Expert Interview Series. Have a great day.
That concludes this episode of the Expert Series from Selling Your Canadian Business. This conversation is for educational purposes only and is not professional advice. Always consult qualified professionals. Click on any of the additional resources on screen or visit sellingyourcanadianbusiness.ca. Thank you for joining us.